Boom. So it looks like Shawn is all the rage because this room is full. So thank you so much, Shawn, for joining us. All of you for coming out today. We have a very special treat. Shawn, as you know, is right next door in Building B with Gravity Mortgage, and he has, per your request, come out today and talk to us about lending 101. So we're looking at anything from the application all the way to closing. He's going to be going over that. Please feel free to let him speak initially. Go over a lot of things, some questions that you may have. He may answer them as he's going through his presentation, but of course we will have Q&A afterwards. And so I just want to give another round of applause. Thank you so much, Shawn, for being here, and turn the time over to you.
Thank you. Okay, no applause. All right, guys. First question for you guys. What is the difference between a pre-qualification and a pre-approval? First person to raise their hand. Oh my gosh. Okay, you can't raise your hand to any of my questions. No, you can't. You got to keep it zipped. Nobody? Okay. All right. So pre-qualification is a conversation. Pre-approval, that means you got an application, you've checked income, assets, credit, and chances are you've run DU. Who knows what DU is? That's right. Desktop underwriter. Why is that important to your job? Anybody? Whether you're listing or selling, either one.
Let you know how far in the process they are and how close they are to possibly closing that deal.
Exactly. So the only way you can get a desktop underwriter response, and then I'm going to go all the way back to the beginning and we'll start talking about what we need for the application and things like that. The reason that you want that is because that is what all lenders go off of as far as conditions are concerned on the loan. Okay. So when we pull a desktop underwriter, we're going to get a list. Now, first of all, it's going to tell us, hey, is this an approved eligible response, which is the ultimate? That's what we want. Is it approved ineligible, meaning that there's something that the system doesn't like? It may be, maybe it's over the county loan limit, something simple like that. Or it could be something to the effect of they've got something on their credit that the system just doesn't like. It's still giving it an approval. It's just not giving us the ultimate submission, which is approved eligible response. Okay. What about how many types of different loans are there as far? I'll give you guys the first one. We've got traditionally is conventional financing. What's another one? FHA. VA. Exactly. What about the last one? All right, you guys got to really think about this one. CalHAP is technically no, but it's a good guess. That's a good guess for sure. Private money, hard money, private money or hard money. Why is that important? That's important because especially during these times right now, maybe we've got somebody that has really good income, but their credit is horrible. Or they've got really good credit, but they can't really prove their income. Okay. Do you guys know of anybody that gets paid twice a year? Every 6 months, they get massive checks, $75,000 to $100,000. No. I do. I've dealt with those people pretty consistently. Yeah. I don't know how they budget it, but fantastic. You know, good for them for doing it. Proving that income is very, very hard because underwriters want to see monthly. We break everything down to monthly because when you purchase a house, what do you have? A monthly mortgage payment. Exactly. Okay. As far as your monthly mortgage payment is concerned, what do we incorporate into that overall monthly mortgage payment? What was that? Property taxes. That's one. Insurance.
Melrose, HOA, or no, not HOA, right?
No, HOA is in there. HOA. Yeah, if there is an HOA, for sure. Yeah, Melrose usually is part of the property tax. So when we pull the tax rolls, that's a good thing you're bringing up. When we pull the tax rolls on that, it's part of it. Okay. Last piece of that is typically going to be just your principal and interest repayment on loan. Okay. So you've got potentially 4 aspects. Okay. So let's start from the very beginning now that we've kind of gone over a few of the terms and things like that. What is, when you guys are meeting with a client, what do you traditionally start the conversation with in your roles? Anybody?
Have you
Have you been pre-approved? That's a good one. What was yours?
Oh, I just said, how can I help you?
Okay. No, that's right. No, that's a good icebreaker, right? That's a good icebreaker.
I usually just ask them if they are already currently working with the lender, and if so, if they've been pre-approved, if not, if I can recommend a lender to them.
Perfect. That's exactly it. That's exactly it. So you want to find out if they've actually talked to a lender already. Okay. Somebody that is 100% prepared to purchase a house traditionally is not just going to walk in and give you, hey, here's my desktop underwriter approval. Here's my pre-approval from my lender. Traditionally, they're not going to do that. You guys are going to have to pull that information out of them, or you're going to have to ask them that very poignant question, which is, have you spoken to a lender? If not, we've got somebody here. Now, do I expect to get all of your business? No, not at all. Maria, I've known you since I've been here. Have we ever done a transaction together? No. Do you have any hard feelings about it?
No.
Neither do I. No. Why? Because she uses Dawn, right? Now, maybe she used Michelle, right? Who was here previously. That's totally fine. If you guys are working with a lender that you feel comfortable with and they're answering your questions, they're getting your deals closed, okay? And the most important factor, they're available when your client calls them, then keep using it. If the wheel's not broken, don't try and fix it. Just let it go, okay? Now, if you need a second opinion on that, or maybe you've got a client that doesn't kind of fit in their box and they're not able to help them, I can do it. Maybe. Give me a shot. We'll check it out. Okay. So application process. All right. What are the, David, Donna, you can't do this one either. We've done presentations together and they hear my spiel consistently when we're sitting in the conference room, which is why I'm trying to muffle them because they know the answers to every one of these questions. What are the 4 boxes that we need to check in order to conduct a pre-approval and get somebody pre-approved? What are the 4 major groups that we're looking at? Anybody?
Income.
Yep, that's one. Income. What was that?
Credit score.
Yeah.
Credit. Yep. 2.
Proof of funds.
Assets. Proof of funds. Yep. What's that?
How long are they in the job?
Yes, that kind of goes into the income thing, but yes, so that's very, very important.
Yeah.
David and Donna and I just met with a client yesterday. She's been employed since June of last year. Okay. What are we looking for from a lender perspective? What are we looking for?
Your income. 2 consecutive years of employment, same line of work.
You
Oh,
almost got the high five. I'll give you a
The
little
same
one. Yes.
job, right?
no.
It doesn't necessarily have to be the same job. Okay. What if you've got somebody that worked for, and I'm just going to throw this out there, Jack in the Box. They were making $12 an hour. Then all of a sudden McDonald's comes out and they say, hey, we're going to pay you $18 an hour to do the same exact thing, just different product.
Oh,
So
okay.
work history.
Work history. That's the big thing. We want to see 2 years worth of work history.
Okay.
Okay. So when we're qualifying people, Donna and David know this. One of the first things that I kind of strategically try and get to is how long have you been with your employer? What were you doing a year and a half ago?
Mhm.
That type of thing. We want to know that not because I need that information, but because the underwriters want that information. Okay. Yes.
Wonder if they've only had a job for 2 years.
So if they've only had a job for 2 years, fantastic.
It doesn't matter.
Doesn't matter.
Like their first job, 2 years.
First job, are they making enough money to qualify? Yes, fantastic. Yeah, then we can use it. Yeah, 100%. If they've changed jobs, let's say they started in manufacturing or something like that, and now they're driving a truck. Okay. Does that matter? Not really, unless they took a huge decrease in pay or something like that, which right now that's not happening.
Yeah.
Most people are switching jobs to make more money because nobody wants to work right now, right? Not to get political. But we want to see that 2-year history. What if there's a 3-month gap in there? That's a problem. We got to get an explanation for that. Yeah. Now, when I say a problem, that's a problem for me because that creates more work for me and it's not a seamless thing. Does that mean we can't do it? No, not at all. That's not what it means. What it means is I've got some work to do. Okay, to try and pull this information out. Okay, so as far as income is concerned, okay, Does it matter? Do you guys think it matters whether they're an hourly employee or a salaried employee or anything like that? Does it matter?
No.
No, correct. It doesn't. Stability of their job comes from the time that they're there and no gaps. Doesn't matter whether they're salaried, whether they're hourly, doesn't matter. Okay. Now, what if, because there's another aspect of income that we need to talk about. What if they're commission only, like yours truly, and most of you out there? What happens there? Yes, exactly. Great poll, Maria. You need tax returns. So if somebody is self-employed or they're receiving commission income as the majority of their income, chances are we're going to need those tax returns. Okay. You guys, most of you guys, I'm assuming are 1099. I don't know how you guys get paid, but I'm assuming you guys are 1099, just like myself. So when you're doing your taxes, you get your 1040s, you take those 1099s, your CPA, if you have a CPA, he staples them to them. Everything is in one nice, neat little package. Okay. That's what we want to see. Yes.
How many years of back taxes?
Two. Magic number for income, 2 years. Just have that in the back of your head. Income, 2 years, 2 years. I need to be able to prove 2 years. Okay. Let's see, we had income, assets. What are we looking for as far as assets are concerned?
Stuff's paid off or?
That would show up in the credit.
2 months.
2 months. You can tell TC right here knows. She talks to lenders all day long. So yes, we want to see at least 2 months worth of bank statements.
Oh, okay.
When we're looking at bank statements, what do we pay attention to as lenders? We're looking for large deposits. Yes, large deposits.
You know that money you
Why?
guys are all keeping under your mattress?
Yep.
And then you decided to put it into your bank. That's a red flag for the lenders.
It is. It's a red flag for us. But am I guilty of doing that? 100%. 100%. You've got to save for a rainy day, right?
What if I put it in there 2 months before I go to the lender?
Yeah.
Then you're
Perfect.
fine.
Then you're
That's how
fine.
the system.
Then you're absolutely fine. So when you're doing that initial kind of conversation with somebody, and it's a very hard kind of step to take when you're face to face with someone. But if you guys can actually just plant that seed with them and say, you know what, I know this is going to be uncomfortable to talk about. Have you saved up for a down payment? Do you have, you know, what's approximate in your bank account? What I do to kind of soften the blow with them, and David and Donna have heard me say this a few times, is I need to know what you've got approximately in your bank account. I don't need exact balances, and I only want you to disclose what you feel comfortable disclosing. Okay, because a lot of people, maybe they've got a 401k account and they've got $700,000, but they don't want anybody to know that, including their family. They don't want anybody to know that. That's okay. That's okay. That's totally fine. What are your average balances? What do you usually keep in there? Okay, so we are looking for large deposits because that's a problem. Okay, when we're talking about large deposits, rule of thumb, how much do you make on a monthly basis? $5,000 a month? Awesome. Is there a deposit that is larger than that? That's what we really, really are concerned with. Okay, more times than not, I can talk an underwriter out. If there's a $2,500 one, I can usually talk them out of putting that as a condition. Okay, so we got assets, 2 months, right? Let's go back to income. How many pay stubs do I need to determine somebody's income on a monthly basis?
2.
Yes, excellent. We got like the front row right here is crushing it right now. Let's go back row. Yes, so I basically want to see minimum of a month, so 30 days. Okay, now if somebody gets paid on a weekly basis, that's 4. If they get paid, you know, bi-monthly, that's 2. You know, maybe 3, something like that. That's okay. I also want to see W-2s, 2 years, 19 and 20. Okay. Now, what I will tell you guys, desktop underwriter, the DU response. A lot of times that DU response will tell me that I only need to have 1 year worth of W-2s. no tax returns, most recent pay stubs covering the last 30 days and 2 months worth of bank statements, right? I am still going to ask for 2 years worth of W-2s. Can anybody justify why I would do that?
So they need to take an income average.
You need to take an income average. That's one.
So they, you know, they have a consistent money coming in.
Okay, that makes sense. Two. This is the big one.
You're paying taxes.
No, no. That's all right. That's all right. That's a good guess. Underwriters. Even though a desktop underwriter response only tells me that I need to have 2020 W-2s, depending on the lender that I go through, they may have what's called an overlay, okay? Which means that even though Fannie Mae says we only need these documents, the lender has their own set of guidelines that are on top of that so that they feel a little bit more secure about giving somebody $500,000, right? So I'm gonna always ask for 2 years, always. What we've started doing is even asking for tax returns as well, even if they're not self-employed. We do that for the same reason, okay? Is I don't wanna have to go back to a client mid-transaction after we've got a conditional approval and say, oh yeah, by the way, we need your tax returns from 2019 and 2020. I don't want to have to make that phone call. That phone call sucks. I've made it way too many times, but lenders right now are starting to pull back a little bit, okay? And we'll possibly get into that maybe in the next session or something like that. Okay, so we've kind of talked about income. We've talked about assets. Does anybody have any questions at this time regarding those two boxes?
I have a question. Okay, say somebody uses all of their money in their bank account to make the down payment. Is that okay? Or do they need extra money?
No,
So they
absolutely.
could have like a zero balance.
That's a
after?
great question. So that's a great question. It depends on the transaction. Okay. It also depends on how many loans they have. If it's a first-time home buyer, traditionally, they're not gonna be required to have reserves. What you're talking about is
Yeah,
reserves.
right.
Yeah.
Okay.
Now, sometimes the lender will require, hey, we need you to have at least 6 months reserves, right?
Okay.
On all properties owned. So if you're dealing with somebody that has invested in real estate, so they've got multiple properties, they've got rentals, they've got a second home, they got a primary, whatever.
Mhm.
They're going to need to have 6 months worth of reserves
Oh, okay.
for every single property.
Oh my God.
Now,
Oh, wow.
yeah, exactly.
Wow.
That's a lot
Yeah.
to keep in reserves and just have sit there, right? How do they calculate that though is really, really important. It's a principal, interest, taxes, and insurance pity payment, right?
Mhm.
Of all the properties for everyone for 6 months. So one property, $3,000 a month
Mhm.
times 6, that's 18 grand. Same with the next one. Same with the next one, another 18 grand, another 18 grand. So that's a lot of money to just be sitting there. Okay. Now, when you're dealing with investors though, and that's probably another class as well, because there's a lot of moving parts with that. When you're dealing with them, you're going to notice that those people traditionally have at least 6 months worth of reserves on all of them.
Yeah, okay.
We can use 401k, retirement, stocks, bank accounts, money markets, savings, checking, whatever it is,
Okay.
opens it up. Anything and everything.
Wow.
Yep, exactly. Except for mattress money. Can't use mattress money. Okay. Any other questions in regards to income? Yes.
I'm just wondering with the large deposit, you said that's a red flag. Why is that? I mean, what is that indicating?
It started back. We had this kind of condition even when I started mortgages back in the late 90s. But most recently, it's basically because, for lack of a better term, they want to make sure that this person isn't a terrorist. That's what it boils down to. It's the Patriot Act. Exactly. Okay. So what you don't want to see is mattress money. You don't want to see $10,000 that they just threw into an account. Where'd you get the cash? You know, I didn't have a check. No, I just threw in the deposit. I don't have the receipt. We just show that. I have no way of proving it. That's going to be tough. That's going to be tough. That is something that will kill a deal. Okay. So when we're pre-qualing people, a good lender, when they're pre-qualing people, they're going to look for exactly those types of things. When I go over a bank statement, I just go, and I'm just looking at where their deposits are. I could really care less about the balance at that particular time. I'm just looking for large deposits because I know that's something I've got to address. Now, let's see, we're in September. Let's say we're in October right now. Okay. So the last 2 months would be September and August, right? Well, maybe they've got on the 15th of August, they had a large deposit of $10,000, right? They have no way of proving what that is. So what does your mind go to? Because I know exactly what mine goes to. You guys are horrible. Oh my God. They got to be a drug dealer. No. The way I look at that, I gotta wait 30 days. I need a new bank statement because I can't prove that deposit. So what am I going to tell that person right out of the gates? Hey, you either, if you're buying a house right now, we need an extended escrow, or we need to wait until we get to this point. I'll give you a pre-approval. That's totally fine. But this is going to be a problem right here.
So even if they have a receipt saying, oh, it was from a family member who wanted to give you money, like that's still not good enough?
No, that's good. And why is it? Because it's explainable and we have proof and it's sourced. That's the big, he stole my thunder. And I was gonna sound really smart right there and be like, we call that sourced. Yeah, no, it's all good. Yeah, that's considered sourced funds.
So then that's okay.
That's okay.
Okay. So you
But-
have to prove it.
How do you prove it?
The person writes it out.
Paper trail.
Wire.
Exactly. Bank statements from the person that gave you the gift,
Oh my God.
a gift letter, a copy of whatever that check was, and I want to see it going into your account on that same day. I want to see that.
So
I wanna
what
see
you're
all
saying is, so basically, the lender's gonna source my funds if I'm buying a house and if I have, $10,000 in the bank. If I borrow or get a gift of 10,000, now they're gonna source those people's funds as well. So if it's mom and dad, they're gonna ask for their statements and everything else, and they can't have just a random deposit also. Because I've seen that happen. where
It
it's like,
happens.
oh, I'm gonna borrow money from my uncle, and all of a sudden he just deposited in half this money, 10,000. It's all gotta get sourced, because they gotta
Right.
get to the bottom line of where is the funds coming from? Gotta be- well, anyway.
Yeah, it's got to be sourced. And so what do we call that? We call that Pandora's box, right? So a good lender is going to realize what those warning signs are. This is going to open up Pandora's box. Do we really want to do this? That's a really good example as to why I never have my clients write a letter of explanation. I write the letter. They sign it. They have to agree to it. I can change it, but I'm not going to go into a long drawn out story as to why they got that money from a relative and or whatever it is. I'm going to make it short, sweet. It's going to read like a book. It's going to have a great beginning to catch the underwriters. It's going to give them the whole story in the beginning, and then it's going to make them feel warm and fuzzy at the very end. And it's taken me good 20 years to figure out that letter. Okay. That works. That actually works. Okay. Any other questions as far as income assets? Got it? So you guys are ready to be LOs instead of real estate officers. All right. So credit, here's the big one. This is something that we all struggle with as far as buyers are concerned. It's just one of those things that happens. Everybody thinks you ask them what their credit score is. What are they going to tell you?
It's good.
It's fantastic. Yeah, no, I think it's pretty good. I think I'm like 750, 850, something like that. Not happening. It's not happening. I can count it. Yeah, I got 5 out of 10. Yeah, I've got one, probably somebody that's had over an 800 score in the last year. I've got maybe 5 tops, maybe 5. Yeah. And that's, those are skilled people. They pay attention to their stuff. The Busings, just closed one with Felipe. Yeah.
Somebody
800.
told me it takes work to get above 800. It also takes a lot of work to get under 600.
That's right.
So if somebody has under 600 FICO scores, they're literally working at having crappy credit. Like there's no way you can tell me that they have that bad credit without doing something.
Consciously going after it, consciously saying, I can't do it. Now, certain people, maybe they got into a financial bind or something like that, and they had to let something go. What's the first thing that traditionally happens? It's a credit card payment, usually, maybe a student loan, something like that. Those will usually pop off. Very rarely is it a car payment. Sometimes it's a mortgage payment, but I think we're kind of over that now. Not seeing too many of those anymore. A few years back, we saw that consistently. I was writing letters of explanation and talking to other mortgage companies. That was half of my job, is because everybody was coming out of that 2008, 2009 debacle. Okay. And they all had lates because the banks were telling them you have to have a late in order for us to modify your loan.
Yeah.
I don't know. I never understood that. Okay. What do you guys think is not a great credit score, but just a solid credit score? Solid as far as lending, like these people look pretty good. 720. 720 now is considered a solid score. When you get above 750 on conventional type loans, so your traditional 30-year fixed, Fannie Mae, Freddie Mac type of a loan, okay, you're going to get the best pricing possible at 750. Okay, 750. Every lender is different. Some of you guys know that I spent a lot of time with Navy Federal Credit Union. Got a massive education as far as VA loans were concerned. That 640 for VA was fantastic. As long as you had a 640, you could fly. I could even get them going at 620, 621.
Wow.
Yeah, it was fantastic. So VA is a whole different animal, and that's probably another class of just talking about specifically VA. There's a lot of moving parts with VA. In my opinion, though, it is the best, hands down, the best loan that you can ever get. Hands down. It's going to kill conventional, absolutely crushes FHA, definitely better than private money. So, all right, VA. In regards to credit, and we've already talked about the scores and things like that. How many credit scores does one individual get? 3. Anybody know the names of the credit reporting agencies? There you go. All right. You guys can be LOs. That's easy. All right. Okay. So from a lending perspective, which score do we take?
No, the middle.
I heard lowest.
The middle.
Middle. Anybody think it's the highest?
No.
No? Good, because it's not. It's the middle. It's the middle. But Aaron's also right. It's the lowest middle score. Okay. So if you've got a married couple, and I'll try and make this easy because I'll forget what I just said. So they both have their high scores are 750, and both of them, their low scores are 690. Okay. But then you've got one that's at 700 and one that's at 701. We're using the 700. Okay. So we're using the lowest middle score. All right. Now that can kill a deal. A lot of times that can kill a deal or make it harder or increase their interest rate or something like that. Okay. So keep that in the back of your mind. Now we have some tricks of the trade when it comes to stuff like that. We can, depending on how long we've got and how long I've been working with the people, if they're right on the border of getting a better interest rate or having a smoother transaction, I'm going to be on the phone with them, talking to them about how to bump that score. Okay. Our credit company that we use will allow us to run scenarios on anybody. There's a little bit of money involved in it, but if somebody really, really is into it and they really want to improve their scores, it's a great model. Okay. And it happens pretty fast. Okay. To give you an example, as far as the model, as far as credit is concerned, it will say your score is here. If you pay this off or pay this one down to this amount, it will raise your score to this and it will give me that score. Okay. And that's invaluable for a lot of clients. A lot of clients.
How many times are you, oh, sorry.
Okay.
How long does that take to do?
That's the key. It depends on the client. It depends on the client and their responsiveness. It can happen as early as 15 days. I can rerun it and boom, we can be set. Yeah. Most times you're looking at 30, probably 45. Sometimes some companies, depending on if it's a credit card, if it's a student loan, if it was a mortgage payment, whatever it was, car payment, the actual lender for them, for that particular line, they won't update it for 30 days, a full cycle date. Yes, Maria.
I have a question. You brought up student loans a couple times. And I thought that they didn't affect the.
I'm glad you brought it up. Absolutely. So that's the major change that has happened this year. Okay, is that all of the well, not all of the lenders, most of the lenders at this point are falling in line to where they are not counting student loans if there is not a minimum payment. Okay, so let's say somebody had $20,000 worth of student loans, right? The minimum payment on that traditionally would show up if they're making payments on it. But what if it's deferred? Doesn't show, it shows a 0, right? So what we would have to do is we would have to take 1% of that 20,000 and hit them for that payment on a monthly basis. Now what the rule is with a lot of lenders is if it's a 0 on the credit report, you do not have to calculate a minimum payment. It's 0. It does not count. And it doesn't matter whether they have $300,000 worth of student loans. Doesn't matter.
You're still getting like the deferred letters though from the.
Yes.
Okay.
Yes. So if there's a lot of times, and that's going to probably go away because it's like the last loan that we did, we had that situation come up. They didn't ask for a deferral letter. So
So
it's still
all
on that
loans are
point.
being deferred right now until
Mhm.
February, March, or so what happens when that goes away?
It's only deferred if the person that has a student loan has chosen to defer it. So if somebody has, let's say $100,000, Busings were a great example of that. She was an attorney. She had massive student loans and things like that, but she just paid them down and paid them down. I wish I could clone them and make them every single one of my clients. She's still making that payment. So it showed up on her credit report as $200. I included it. I'm fine, totally fine. Don't need anything from them. Because we're including it in, right? But if they are having or deferring their student loans, the first thing I do is, do you have a deferral letter? Just in case. The underwriter may not ask for it, but I want to have it because I just don't like going back to my clients the last hour. But it always happens. Okay. There was another question too.
Shawn, what about a 20-year-old with very little of?
Great question. Great question. You're talking about my daughter, really? Yeah. Because she's 22. She had 0 credit last year, 0. So that's a problem. Yeah, it's going to be a problem. We need to have a score. There are some lenders that will go out there and they will say, we'll use alternative credit. Okay. So like a phone bill, electric bill, something like that, water bill, any of those types of things.
What if they have, authorized their, and they are unauthorized using somebody else's credit card, that credit score counts in it?
Sure. Yeah. If they get a score, yeah, it's their score. If they're an authorized user on that account, yeah. And you get a score, you get 3 scores. Yeah, we can use those scores for sure.
There's a certain amount of credit cards or lines of credit that they need to have.
No. Traditionally, it's just the score. Traditionally, it's just a score. Now, if we've got an individual, let's say we've got a young individual that is purchasing, maybe they got a little bit of an inheritance or they're just, together, whatever. And they want to go ahead and buy a house, but they only have 3 lines of credit, but they've got 750 credit scores, right? They paid their bills and things like that. Is it possible that the underwriter is going to call that out? Yeah. So then that's when I step in, I give them a letter of explanation that I write once again, have them sign it and agree to it and give it to the underwriter. Yeah. So that's a great question because that does happen, especially right now. Because a lot of young adults are looking at this stuff. They're looking at the rental market and they're looking at the housing market and they're like, hey, I could buy a manufactured home for say $200,000 and my mortgage payment is less than what I would be paying in rent by half, right? So that's what I'm going to try and do. I'll get a gift from my parents. So we got a gift letter. We got tons of bank statements because we got to prove all the gifts going back and forth. We got income and we've got a 750 credit score, hopefully. That's a deal, 100%. 100% deal. Yes.
How many times are you guys running credit? So you're running it once and then when you submit it to the actual lender, they're running it again?
No. So the way it's supposed to work is I run the credit and then I get a reference number. So I get the actual credit report. I get this reference number. I pass that on to the lender, the actual lender, the underwriter.
Right.
They just go into the system and they're supposed to just pull that credit report from that. That is not a new hit.
Okay.
That is just one hit and it's just they're just basically reprinting that credit report.
So if I'm starting my transaction now and you're running the credit report now, and then in a few weeks, we're, going through this whole process, my credit's not going to be run again.
Correct. It should not be unless you did something silly and went out and bought a car
Or furniture.
or furniture or a washing machine or appliances or blinds and stuff like that, which will show up. Okay. Because what happens is I get that credit report in. As soon as I send that over to the lender, they go F12, boom, all of a sudden, now they're going to get notified anytime that individual applies for any other type of credit. Right? Yeah. Aw. Yeah. That's exactly what I do. Aw. And then I throw things and I yell and I curse and stuff like that. I'm like, we told you. No, I don't do that. Becca does that. Becca does that all the time.
I do that.
So yes, that's a very, very good thing. So when you're in your initial call, your initial meet and greet and things like that, you're talking about income, right? You want to kind of just find out if they've actually talked to a lender, make sure that they're employed and that you're not wasting your time. You want to find out if they saved up any money, things like that. And then one of the parting things you can say is, you know what, if you guys are really serious about this, will you do me just a huge favor? And they're going to be totally caught off guard because they're not going to expect this. Just say, don't make any large purchases right now. You know, suppress that feeling.
Don't get fired from your job.
Don't get fired from your job. Exactly. Be the model employee.
Don't quit. and
Don't
start a
spend
new
money.
job.
Don't just save. You know, we want everybody to look just fantastic. And if you break it down to them and you say, look, it's going to take us probably 15 days to 30 days to find you a property. This is a 60-day thing. I'm just asking you to do this for 60 days. After you close, go hog wild. Get yourself even more in debt. Fantastic. Because you guys don't care, neither do I. That's whatever. You know, that's up to you. And you guys can't control that. You know, trust me, I've tried. Can't do it. All right.
Question in regards to credit.
Yes.
With this market that we're sitting in now, where say maybe someone's looking for 3, 4, 5 months, haven't found anything yet. How long is that credit score going to be good for?
Excellent. 90 days. Typically, it's 90 days. So remember, though, if it's taking that long, if let's say I did it today, right, and they don't get into a property until Halloween, all right, and we've got a 30-day escrow, we're looking at borderline 60 days on the same credit report. And if they haven't done anything, they haven't applied for anything, and there's no notifications from the F12, then you should be fine. You should be okay. You shouldn't ask to repull your credit. I say should. I say should because there are lenders out there that will pull credit right before you close. I don't usually use those lenders. I don't want to use those lenders because that will kill a transaction. And to me, that's like throwing kind of a hand grenade, you know, and just waiting for it. I just don't like it because we've already structured it based on their credit score, which means your interest rate is set. We've locked it. We've proven your income. We've done all these things in that pre-approval process. And now they just threw out a credit and there's potential that that score is going to go down. What if it knocks them out of that rate? That's horrible. We've had that happen. I've had that happen. And that's a really, really hard conversation to have with someone because they're not going to accept that responsibility. They're not going to accept the fact, I was only 5 days late on my credit card payment. So that's why it happened. Sorry, your rate just went up 0.5%, you know, and it may have just knocked you out of approval. So when we're dealing with, that's why I say when we're dealing with these transactions, if you, part of your exit strategy when you're leaving that person, just say, hey, promise me you guys aren't going to buy anything for 60 days. You know, let's make an agreement. If you guys are really serious about doing this, let's just not buy anything for 60 days. Let's see if we can do that, you know. Any questions, any other questions? That was a great question, by the way, for credit.
I have a quick question. What's the interest rate at right now?
Interest rates, just mortgages in general. I was going to close with that. Because no, I'm glad you're bringing it up. And does anybody pay attention to the bond market?
No, sounds
Is
boring.
any besides you? You're like Mr. Finance anyway. So he's texting me about, is this a good stock? Da, 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 da. No, he's not. He doesn't do that. So I watch the 10-year yield. The ticker symbol is the caret. It's the little TP over the 7. TNX. None of you wrote that down. That is a major piece. Now, does the mortgage industry follow it like by the book and things like that? No, not really. Just depends on the lender. Some lenders will. They see the 10-year bond yield, like take a digger, and they'll start to adjust their interest rates down. Okay. Or they'll see it kind of creep up and they'll adjust them and they'll do a midday price change, maybe a couple of midday price changes. And then there's companies like Navy Federal Credit Union who doesn't change their interest rates for 3 months. Reason for that is another class, but just a real simple Cliff Notes version of it is the bigger the institution, the less they're going to care about fluctuations in the market. The smaller the institutions, which you're talking about the broker side right now, they're going to care about that a lot. They want to eke every little bit out, right? Navy Federal Credit Union right now is at 3.5% on their VA loans. Where am I at? 3 1/8. Why is that? It's because they haven't adjusted their interest rates depending on the market, and all the lenders I have do it on a daily basis, sometimes a couple times a day. So I can offer that lower interest rate. I have the potential to do that. Whereas Navy Fed is just this monster that just brings in thousands and thousands of loans on a monthly basis, right? So that's the biggest difference. So that's a great question. So interest rates right now, if you had been following the 10-year yield, so I'm going to call out Felipe. You've seen it over the last hopefully week, 2 weeks maybe. What's it done?
Still on it too. I mean, it's kind of started going up.
Start going up. So since you guys wrote down that ticker symbol, afterwards, if you want to go through it, I've got it on my laptop. I see it every day. I monitor it until 2 o'clock. I can show you what we're looking at and why. Okay. But basically the 10-year yield, when you look at it, is going to be measuring what's called the yield. Okay. If you see a negative number, traditionally it's in red, that's good for rates. If you see a positive number or a green number and it's going up, that's bad for rates. So interest rates follow the yields. Okay. So we want to see, traditionally, we want to see kind of downturn and then flat. Downturn, maybe flat. That means that we've got a decreasing interest rate environment. Right now, over the last 2 weeks, we've seen an increase. Can anybody guess as to why that is? It almost happened to the minute of when this event happened. Withdrawal from Afghanistan. People don't want to accept that, but it's absolutely 100% true. Though that little factor right there is what caused a shift right there. I'm not placing blame. I'm not saying that we shouldn't. I'm not getting political. I'm just saying that was the event. So it's not just the stock market. It's not just what the Treasury does. Those are big impacts, absolutely. But there's also this political factor that has been there probably since about 2002, 2003 is when I picked up on it. It's probably been there for a lot longer. That's just when I noticed it. It was right around in that time.
Yeah, and pretty much anytime there's a world event, I mean, it's always going to cause a shift in the Treasury, the yield, and also the, I mean, always.
Because the market's trying to figure out, okay, where can we put our money that's gonna work the best, where we get the highest yield out of our money. And when you've got a lot of people that are investing in maybe government contracted companies and things like that, and we just pulled out and we just pulled out all that stuff, they're going to look at it and go, oh, where do I need to go now? They pull their money out and they start looking. Where they should go is crypto, right? All right. Any other questions as far as credit is concerned? And how much time do I have? When do you need to get up? Okay. Any other questions? Yes.
What about medical bills on your credit?
Great question. Awesome. So medical bills, traditionally, we don't care about. Now, that impacts your credit score. We care about the credit score. But if you've got medical payment data and somebody got into an accident, or God forbid, somebody got cancer or something like that, and I've dealt with all of that, guys. I mean, that's just something, that's how you get personal with your clients is they pull back the veil, and I've got income, assets, credit. I've got their whole life in front of me. So that there's just no option for them not to be personal about it. But traditionally, we don't really care about that. I can give a letter of explanation to the underwriter if they have a question. I can just say, you know, unfortunately, this person got in a car accident. They had they were, you know, the person was uninsured. They didn't have insurance, and here we are. And this is how it happened. Most of the time, my experience, underwriters are going to look at it and go, oh, that's medical payment data. I don't care. Don't care. But they're still going to look at that score. They're still going to look at that score. David.
When are the lenders going to get control of appraisals?
Never. No. It's starting. It's starting. Thank you for that question. That's something I definitely needed to bring up, and I probably wouldn't have. It's not in my notes. So you guys are setting out contracts, right? And we talked about this when we did the Zoom call about the new contracts. So those of you that were in that class, what is the appraisal contingency?
17.
17 days. So here's the appraisal process a month ago. You get a deal, you get me the contract. I've already pre-approved them. So all I'm doing is I'm adding in the property address, right? Maybe changing some numbers because maybe they offered a little bit less than what we've had them pre-approved for. Change some numbers, make sure they're accurate, look at possibly locking the interest rate, communicate with the client and say, hey, this is what your payment's going to be if we lock in today. Are you comfortable with that? Yes, I am. We lock the interest rate. I ship that file off to my processor. I'm making phone calls to the listing agent, talking to escrow, talking to title, because I want to be in that information loop. I'm keeping my processor involved as well. But what is my processor doing? She's taking that file, she's inputting it into a lender system, and most importantly, she's ordering an appraisal. That appraisal gets ordered through a company called, anybody? David, you've been in the business a long time. Appraisal Nation. Appraisal Nation. So that's one of the largest is Appraisal Nation. Solidify, I think, is another one. We don't use them, but it goes into a round robin. So Appraisal Nation gets that. And now I'm relying on a $12 an hour employee to input everything in. Did I say incorrectly? Yeah, because 90% of the time it is correctly, and actually hitting enter. And then I'm waiting for an appraiser to actually pick up that order and say, yeah, I'll go ahead and do that for $550. Or no, I'm not going to do that, but I'll do it for $700. Yeah. So then let's say it's a rural property. Appraiser doesn't want it. They got to drive all this way. All of a sudden their profit starts to decrease. They're like, nah, not worth it. So it sits in their system until someone picks it up. All right. So what do I do? What does my processor do? Because now I've got the listing agent going, hey, why we haven't gotten a phone call from the appraiser yet. I'm on the phone with them, fighting with them. Well, nobody's picked it up. That's a problem. That's a huge problem. So especially when we went from 21 days to 17, now I've just lost 4 days. If there's a weekend in there, which there's 2, guess what? I just lost 9 days. Business days gone, toast, right? So what David was talking about is some of the big lenders now have reinitiated having their own appraisal department, which I could have jumped through the roof when that happened. I was so excited because now what happens is I talk to the lender and I say, and this is effective actually tomorrow. I talk to the lender and I say, hey, we've got this loan file. Candy is my processor. She throws everything in there. We're good to go. She goes in, she orders up the appraisal. It goes right to their system. They immediately assign it. They don't wait for them to pick it up. They say,
cool.
Mr. Appraiser, you have an order. Okay. And by the way, it's due by this date because now I have the ability to put in the due date.
So now it's gonna shorten all those timelines, right?
Exactly. So it's perfect timing for all of these things happen, which by the way, guys, that never happens in the mortgage industry. It is never just a perfect scenario. It's always the perfect storm. It's never the perfect scenario. It's never sunshine. So I love this thing. You guys have no idea how excited.
So is it set appraisers that are under that
Yes.
vendor?
Yes.
Okay.
So basically Appraisal Nation, the reason that they made this shift is Appraisal Nation takes a cut for assignment. So that appraiser wasn't even if they agreed to the 550 price, they're not getting 550. Yeah, they're getting probably 450.
So is there a time limit of you order the appraisal today? How much time does that appraiser have to pick up that order?
There wasn't a time frame before. Now there's not going to be a time frame because it's assigned to them. So it's like, here you go. Here you go.
They have no choice. They have to take that.
Right now, that's what we're hearing. Do I believe them? No.
So
I think it's going to be 24 to 48 hours before they pick it up.
So
That's just me.
if I have a property that I need an appraisal done on and it's manufactured and you guys assign it to someone who's never done manufactured, do you guys know that? Like, do you know, like this appraiser's never done manufactured?
Nope, not at all. Not at all. Exactly. Exactly. Way to bring the room down there, Rebecca.
Sorry.
No, I'm kidding. She's bringing up, that's a really good point.
I mean,
Because
now that my property now could not be appraised properly because you've never done a manufactured home
correct.
or whatever.
Correct. So good and bad, right? So there's the timing thing is good, but what's the quality of these appraisers that we're getting, right? Most appraisers though, I'll be honest with you, most appraisers that these big lenders are going to pull in, they basically took the top people. And the reason that they did that is because the top people are the ones that were complaining that they were having to pay a cut to Appraisal Nation. So you're still going to get a good quote. You should get a good one. I will track that though, and I'll have an answer for you.
Are they going to be on a time frame as far as like, okay, I am assigning the appraisal to you. You have 7 days to go out, inspect, and turn in a report?
Yes, it's all behind the scenes. So I'll use United Wholesale Mortgage as an example because they were the first ones that came out and said, we're going to do this. Okay. They are setting a standard that they want the report back within 5 days.
Wow.
Exactly. If I see that, fantastic. Do I expect it? No, I expect to get it 10 to 12. That's when I expect to get it. It's about 10 to 12. We're still under that 17 days, but why is it important? And then I'm going to get to your question. Why is it important that we wait until the appraisal comes in before we release the loan contingency?
Make sure it freezes.
Exactly. Because what if it doesn't? What if it's under?
Then they're gonna have an issue.
You got an issue and they're either going to have to bring in money. Like I just had a borrower that just had to do that, right? Fortunately, it was within their budget and it was within what Heidi put on the contract. She put a limit of 10 grand. We squeaked in at 7,400, 7,500, something like that. Yep. I talked to her daughter about it and she almost jumped through the phone. She was so excited. Yeah, she was super excited about it. And it was because Heidi set that expectation up front by saying, look, when you guys make this offer, there's a good chance that it's not going to come in at that. So we need to be prepared, but we're going to put a limit on it. They're prepared in their mind to pay 10 grand. At that point, they're prepared. And then I look like a rock star because I said, that's only $7,500. It's still $7,500, right? So yeah, so that's a great question. Oh, gotcha. Okay, yeah. And if you guys, obviously you can talk amongst yourselves, in regards to those types of things like you do, but you can also come to me about that too. Once again, this process is going to start October 1st. So I'll have a lot more data that I can just kind of throw at you guys, probably mid-month. Depends on how many referrals I get from you guys. All right. So we've talked about income. We've talked about assets. We've talked about credit. We talked about appraisals. What's that last box? It's the actual house that they're purchasing. When I get the income, let's say, and the meetings that I do with David and Donna are a very good example of this. And David presses me up against the glass every single time. We'll be sitting there with them. They'll give me their approximate income. They haven't brought in their pay stubs. They'll tell me approximately how much money that they have in the bank and approximately what their credit scores are. So we're doing a verbal pre-qualification, right? This is not a pre-approval. I'm not telling you you are pre-approved for a loan because I have not gotten this documentation. And I will not give anybody a pre-approval unless I see their documentation because I've been burned too many times and I just won't do it anymore. The last box is the actual house. Now I need all those other aspects to determine what that number is. And that's what you guys want from your lender. Okay. Which is why David puts me up against the glass and keeps pressuring me while we're sitting there. What can we do? Because he's setting them up on that program immediately to start looking at houses. It's brilliant. It changes. It could change. The lady that we met last night, Susan, great example of it. Okay. No pay. She actually had her pay stubs, which was cool. Okay. But her pay stubs, after I left the meeting, started thinking about it. Yeah, that was net. Those aren't gross figures. That's net. I didn't take that tax into consideration. So at 317, I think is what we were talking about. That could go up. That could go up to almost 400 right there. Okay. So what we're doing is when we do that pre-qualification, we're looking for that last box, which is determining what the price of the house that they can afford. Then what I do behind the scenes, and you guys are going to hate this, but then I have another conversation with them and I say, okay, we got you pre-qualified for $700,000, right? I got the desktop underwriter approval. Everything looks fantastic. But remember in our initial meeting, when we talked about this, I'm using gross figures, not net. add 20 to 25% to your debt to income ratios. You're at a 43. You're going to be at a 68%. So almost 70% of your income is going towards your house. Are you okay with that? Depends on how bad they want that house. And it also depends on how they manage their finances. Okay. If I see somebody that's got really heavy credit card debt and their scores are kind of low, I'm going to tell them, you need to lower that down. I think your comfort level, it needs to be a little bit more realistic. No champagne, stick to beer. You're good. Yeah, you'll be fine. You'll be fine. Just have more beer. Okay. Any questions? All right. So guys, this was just believe it or not, this is just a very brief overview. There's a lot of terms and acronyms that you guys will hear your lender say. So I'm just going to go through, we already covered DU. There's one more that's very, very important, and this is music to your ears. CTC. There you go. CTC. Anybody besides David, Rebecca, and Felipe, and David, what does CTC stand for? That's right. It's clear to close. Now, why is that important? Why do we want it? Why do we want that?
All conditions have been met.
All conditions are done and we can order loan docs. Okay. So that is what we're all shooting for. So when I get a file, all I'm thinking about, how do I get to CTC? Just get me to that finish line. They say that, life, it's all about the journey. Yeah, not when it comes to mortgage loans. When it comes to mortgage loans, all I care about is CTC and docs. I don't care about that journey. I will do whatever it takes, and I will get my borrowers and your clients to do whatever it takes if they're willing to get that CTC. We will get it done. Okay.
Can you just kind of explain to them what they should be asking? Like, did the CD go out?
Mm-hmm.
Who should they be caught? Should they be checking with escrow, with you? Because sometimes agents will ask me and I tell them, you need to go ask the other side or the agent or lender or escrow.
Sure.
In regards to the CD going out, the 3 days, the clear to close, ordering loan docs, all of that stuff. Like, what questions should they be asking so that they know where they're at in the process?
Sure, absolutely. In a perfect world, you guys shouldn't be asking any questions. None. The lender should be bringing that to your attention.
And that doesn't.
I love that.
Right.
I absolutely love that. I love calling my real estate professional and saying, like, when I did it with Felipe, I was like, dude, CD went out. I love that. And he's like, wait a minute, what? And that was like 10 days. Yeah. There's CDs. What are you talking about? You're trying to sell me something? No. So that was like within 10 days, we were set.
Right.
Okay. Now, just because the CD went out, it doesn't mean that you have clear to close. It doesn't mean that you're ready to close that transaction. You still may have some conditions in there, but you don't have that 3-day waiting period, right? So if it's closing disclosure goes out on a Thursday, okay? When is the first day that your clients can sign?
Monday?
Monday.
So they count that.
They count Saturday. Now, if it goes out on Friday, Saturday, Monday, Tuesday, it's Wednesday. You only skip, it's only one day, but because that weekend's in there, Sunday really screws you up, right? So you've only got, Friday, Saturday, Monday. Sorry, yeah. So Tuesday is the first day you can sign, okay? So just remember the day that the CD goes out, as long as they acknowledge it and sign it, okay? And technically in California, they don't have to sign it. That counts as day one. Got to be before midnight. That counts as day one. Okay, so good question. So terms to remember, CTC, that's what you're looking for. That's what we're all trying to get. CD, closing disclosure, 3 days. We all know that it's not a perfect world, so I am going to answer your question. Yeah, you should be asking if the CD went out. You should ask what's remaining to get CTC. Exactly like that. What is remaining to get CTC? And a good real estate agent is going to do anything they can to assist the process. I will only come to you guys if we're doing a deal if I'm not getting a response from the borrower.
Right.
If I've got a good line of communication, they're returning my calls, we're texting, we're emailing, all that stuff, you guys aren't going to know about it. Hopefully you're just getting notifications of, This is good. We're solid, right? Otherwise, yeah, until you get CTC, call that lender every other day. Why not? I don't mind talking to you guys. I think a lot of you guys are fun. David's a pain, but you guys are great. He knows I love him. All right. Any other questions, guys? David's giving me the hairy eyeball. Gonna get the cane out.
Fantastic. Thank you so much.
All right, guys.
So I hope you all took a ton of notes. I know I've got my pages over there. Of course, you have any other questions, Shawn is always just next door, or a phone call or text or email away. So feel free to reach out to him. There's so much more we can learn as we want to educate ourselves about the lending process, so we can bring him back into some other things, FHA, VA, conventional, talk about those as well. So that's something we can put on the calendar. But that's going to conclude our time for today. Thank you for coming out. Really appreciate you guys being here, present, taking notes. I know you guys will be rock stars. All right. Thank you.